Hello and welcome again on Stocks Advisor channel. Here at our channel, we're looking for interesting buy opportunities for US-based stocks. Today we will talk about Ocugen Incorporated, traded at Nasdaq, ticker name OCGN. Well, OCGN today finished showing a very big upwards white candle with somewhat downwards and upward shadows as well, so it might look like a little bit indecisive, but you can expect, of course, by the end of the day, especially in the Friday last trading day of the week, that we have some upward shadows, so some people were exiting during the end of the trade, also hoping to take some profits and actually stay safe and rest, enjoying their money and profit during the weekend. And for those, of course, who stay in, they will wait and hope for next week, let's say, further growth. And that's the question, how to trade here further. Will we really continue, or what's actually going next with OCGN? Well, and this is a very interesting question, because if you look at this upwards shadow, even now after trading hours, you can see, according to Yahoo, actually it's already minus 4.57%. So you see more people are exiting, and we will discuss this because overall it's a little bit a decelerative trend we could see here with some rebounds, but we will talk about it later. In general, during the day, we saw the price actually was growing all the time linearly with some jumps, so it was mainly purely positive. And of course, after hours, we have some correction. But speaking of 36.8 actually plus during a day for a company with 2 billion market capitalization, this is really a big move. But in general, this stock is also very volatile, so we don't need to forget about the fact that just by end of December, by the price, it was really low. You could see it was just around 0.3, and then it went all the way, actually in no time, just in 2 months almost, we went all the way to about 18, and this is enormous increase. And this also could lead to very strong, let's say, volatilities. And in general, what we see, at least for now, we have a repetition of two patterns, like two zigzagging jumps. So this was the one that took place by end of December and all January. Now we have the second one repeating the pattern, and the only difference was that here in the first one we pierced through the moving average 20. By the way, as always, we have here three moving averages depicted. Here on the left you see their legends is a moving average 20, 50 and 200 being green, blue and red line correspondingly. So what do we see here? We see that indeed the first time we pierced through moving average 20 in January, which was also bending downwards, so was decelerating. And then within moving average 20 and 50, we found a very strong classical support line, which is usually the line which you always need to watch, especially for stocks whose moving averages are aligned like this, so 20, 50, 200. Overall, these stocks, if you are mid or long-term trader, are safe to stay in. Whenever this pattern is changing, you need to reconsider your portfolio and actually look what to do next. And here, usually this line between moving average 20 and 50 is always on the correction move. It's considered to be a very strong, actually, support line. So indeed it worked here as well. So we see this effect here. But now we had it slightly, again, I could say, by 4 trading sessions ago. But now what's next? Because if you look, we're actually sitting now somewhere a bit lower. So starting by Monday, what could happen? We still might have some volatility inside before going maybe another wave. And then it will be seen, is it really a new big wave, or will we bounce from this resist level, which is clearly seen here? So if this resist level will work as a, let's say, as a bounce line, if it won't be pierced, then of course we know that, okay, this is the end of the game, but still there is a lot of volume to go high, up to 30%. Then maybe we will have major decline and major correction. And then we will need to look how to enter there. But in general, if it spikes up immediately, you could be just in time. So how to trade here now? We still don't need to forget one important fact, is that the company did grow too rapid, too fast. So its actual, let's say, production, its actual business did not catch up with this capitalization growth. So therefore, there is always aftermath, which is the correction or, let's say, reassessment of actual price. And this could be severe sometimes. So then how we play? First of all, we can already buy lower here in the vicinity of the moving average 20 and this line, which is then for us, if we look at more carefully, would be, let's say, let's write it here. So it's this channel. Due to the big scales we have here, it's a bit hard to see, but I will write it here as well. So these are the levels to enter. The first would be 837, which is the current level of moving average 20, and then the higher part is about 920. So if we are with this range, immediately by the volatility, it could be very nice area to enter, because if we spike a little bit lower, now we're after hours 10.71, but still might jump a bit lower. If this is happening, if we are going to touch again moving average 20, which will imagine and continue like this, well, then it's a nice spike to rebound. And then you need to take a profit, because this is very unpredicted stock in the sense of its huge volatilities, although overall quite bullish momentarily, but later it might fastly change as well. So it's a really fastly changing stock. But what we advise as a profit taking is 10 to 15%. And I keep saying it in every video almost, that that's the strategy. That's how we assess our videos to be successful or not in the prediction. And that's how we trade as well. Believe me, if you make 10% every month, you will end up 2-3 times your funds in a year, because it's adding up non-linearly. It's actually exponentially adding up. So with this being said, that's the way to enter and make quick profit. What could happen? We might go immediately, let's say, neglection of the price, immediate correction, without even spiking higher. So if this is going to happen, well, it might be a bit severe, because we might test levels just at moving average 50 somewhere. Then therefore we need to be prepared for this averaging down a bit lower levels. And of course the very first level would be around 4. This is a classical level which was reconfirmed also by previous line, by previous top, and another one is just the support line S1 and S2. So these would be then the levels to enter again in case we have immediate decline, immediate price going down. And again, it's not expected actually, but technically it might happen, especially taking into account this after hours move, which could work a little bit negative. So if this is going to happen, of course, it will be very severe still. But as I said, for a company which grow that fast in no time, almost you could also expect a reverse move. Therefore, another level to enter and average down would be from 4 to 5.7. And when I say this, like another level, it's actually a channel, and it means that you also need to enter to the channel slowly. So it's not like once it hit 570 from the top, you immediately buy. No, you can start buying. So the funds that you allocate to buy in this channel, for example, S1, S2, you do not immediately buy once it hits the top of the channel. You start buying gradually, like in 2-3 portions, maybe more. It's up to you, but you need to buy in such a way that you slowly buy through entire channel, or just buy in the middle of it. So this way will be the best, being inside of the channel rather than being on the top, because even volatility of the channel could give you our target 10 to 15% profit on the trade. So with this being said, what should happen if we really have a major decline? For example, we have some negative catalysts coming in. Also could be because these are never predicted and can be happening just because of some news or some other considerations. Well, then we just take another support levels. Here would be actually, let's say, very easy play in that sense. So this would be this line, this very low, and also by that time it's also moving average 200, so very strong support line as well. And these would be S3, S4 levels. And if you look actually in numbers, these are again very low, but if negative catalyst comes in, it could kick the stock price really low as well. So this would be between 138, the current SMA 200, and 2. Why is it very nice level? Because here we also have moving average 200 on the bottom, so it will work as a double support. And usually for these fastly growing stocks that are growing much faster than its business, moving average 200 is considered to be a very strong, also psychological support line, from where again you can rebound. And it's not that you are going to become rich forever and you don't need to do anything, but it means that you can take, again, I repeated, that price the target profit, which is 10 to 15%. And I keep saying it all the time because it's important to develop a strategy of successful traders. So you need to trade positively rather than having this series of bad experiences, because after all, you can just lose all your money which you allocated for play, and then you cannot continue. So with this being said, that's the table how to play with OCGN. This is the numerical representation. If you are more for graphical one, you can just use this one. You can make a screenshot of this one and use it as a trading card. And speaking of how to average down, it's 1-2-2 strategy. What does it mean? It means that the funds you would like to play here and allocate here, you can split in 5 portions. Then you can buy with 1 portion in the first channel or in the first circle, with 2 portions in the second circle, and again with 2 portions in the last circle when needed. A little bit more to say about how to enter within the circle. So imagine you are going to average down within the second circle, which would be from 4 to 570. It means that these funds, these 5 portions, you can split further maybe in 2 or 3 portions, and then you can buy within that channel, as I said also at the beginning, slowly. So this way you will be at least in the middle of the channel when you finish your buying. This is also very important. You don't need to be like a quick player, desperate buyer or desperate seller. It's a smooth game. Also, the way we give the analysis, you can note here, it's not a 15 minutes charts. These are daily charts, because the way we trade is so-called a mixed analysis, a mixed approach. So we use 3 pillars to trade. One is a technical analysis. Second one is nonlinear averaging down based on resist support levels. And the third one is a mitigation of possible risks due to negative catalysts kicking in, which we cannot predict, but they might come any moment for any company. So with these 3 taken into account, we assume that we take out all major risks, and what is remaining is a profit taking. So this is therefore very important. It's not a fast trade. You don't need to sit in your computer daily like those who trade with 15 minutes charts. It's a more smooth one. It's more for those who, let's say, have used the trading as a secondary income, who has their jobs and still are like in the transition phase, let's say, to become a professional traders. So therefore, don't be too fast. Slowly enter, slowly exit. Take your target profit, 10 to 15%. And then everything should be okay. So with this being said, that's all for Ocugen Incorporated, traded at Nasdaq. Good luck with it. Also, please don't forget to subscribe to our channel. This way you will not miss our new videos and new interesting discussions for US-based stocks.